Hey traders, Raghee here, and I'm going to put together kind of a perfect storm that we're dealing with right now. It's happening right now. I want to show you some of the reasons it's happening right now, and the first place I'm going to start is on the economic calendar. Oh, by the way, since this image was up, for those of you that don't use screen capture software, let me make a quick 10-second plea to tell you, download a free screen capture software or even a paid one. I use products from TechSmith. This is something I've used for almost 20 years. This one's free. It's called Jing. And one of the things I encourage the traders to do in the chat room is when they're sharing trades with one another or commenting on trades or asking me or Neil or David questions in the chat room, they can capture a chart, and so we can see what they're seeing. And even when they share charts with one another, or even take entries and kind of take a trade from setup to follow through, you've got this, basically a chronology of chart images that show you the lifespan of a trade. And that kind of analysis, being able to literally replay your day, seeing what caught your eye, notations on the chart, that's such a valuable learning tool I can't even begin to describe. So right now we've got a choppy market in the dollar. So daily chart of the dollar. And just like the dollar is moving sideways, so too is the euro versus US. I mean, that one headed higher and then it's chopping, just like this one headed lower and now it's chopping. So the event on the calendar that I'm talking about is Jerome Powell's very first testimony, as you can see here, in the semi-annual monetary policy report that he does in front of the House Services Committee. This is now, obviously, this is going to be something that we will be dealing with now, the messaging of the new head poobah of the FOMC. And one of the things dollar bulls have been doing is coming out in force. He's a hawkish FOMC. We've already seen a dovish FOMC take the market through a number of rate hikes, December of 16 to December of 17, 100 basis points. We know that this FOMC is going to hike rates, but are they going to be going at a quicker clip than, say, maybe 4 per year? Unlikely. I mean, we're talking anywhere from maybe 2 to 4 hikes. The dollar has continued to sink despite those hikes, and that's because the larger narrative is of whether or not the ECB and the Bank of England are going to shift into their own tightening cycles, which will inevitably be bearish for the US dollar. That's why the dollar's been down. Not because of the hikes and the market ignoring that, but because we have two other large central banks that are in midst of their very own pre-tightening policy. The ECB is in the midst of taper. The Bank of England's waiting for Brexit to get out of their way, and you're going to start to see a shift in messaging, which is inevitably going to be dollar bearish. So Powell dramatically rallied the dollar, and in the premium video, I'm going to talk quite a bit about the levels gold is at right now. But we are at the very edge of validity for what this downtrend may still have. Now, we've cycled out of this downtrend before and then headed back down lower because the dollar is not the captain of its own ship, the euro, and then secondarily the pound are. But one of the setups that you can take advantage of is, one, the overbought fade of not just the Darvis level here, but also the 34 EMA on the high. But then you can dial this down to an intraday time frame. And let me show you what I'm talking about. And it's been meandering around, but it's still, by the way, very valid. And that's this setup right here. So the trade came right there. And then as long as we remain below this level here and this level here, the short is still valid. So you can see we were wandering back up, stair-stepping a bit into the doldrums pre the Asian session. It's a pretty low risk trade. It's about 25 ticks. And the trade is still valid from this level and this level, because as long as we're below these levels, I'm looking for movement to the downside. It's simply that these would be exhaustive trades. And if you don't know what the difference between an exhaustion trade is and a momentum trade, which is what this is here, I would highly recommend you take a trial, hang out with us here at the Simpler Futures Room, because understanding the difference between why this is a valid short and this is a valid short oftentimes is the difference between finding who you are as a trader and not forcing yourself into a certain style that may not suit you. I'm an exhaustive trader. I like exhaustion at ceilings. I like buying exhaustion into floors. So this is one way I'm going to be watching the dollar. The other way, I'm going to give you a sneak peek at something we're going to dive into in the premium video, is how we're doing something equal and opposite here on the 5 minute of gold. And here's what I'm going to leave you with. If the dollar heads lower, gold is going to head higher. You can see my instructions right there. So you know exactly what I'm looking at. Okay? I'll see you in the next update.